Yo, what's up everybody? In this video, we're going to talk about the best trading indicators, the ones in my opinion, and the ones that I use and have the most success with. If you've seen my videos, my charts are very clean, they're very simple, and if you overcomplicate trading, you're going to make it very difficult on yourself. So keep it clean, keep it simple, and just ask yourselves, are the indicators that you're using, are they leading or are they lagging? Does the indicator change after price moves? That's a lagging indicator. Or does price change because of the indicator that you're using? That's leading, and those are the best indicators. Does the market move because of your indicator, or does your indicator move because of the market? And we're going to get into the most leading indicators and the ones that I really found the most success with and the ones that I use on a daily basis. Before we get into it, I'm going to link my Instagram in the description below at Investitrade. I definitely recommend following this. I post daily trading recaps on here along with very good trading tips and tricks that I guarantee you aren't going to find anywhere else. The link is in the description below. You're definitely missing out if you're not following this. But now let's get right into this video lesson. So I see a lot of traders charts. There's nothing wrong with this, but it's just more noise than anything, and it isn't what truly moves the market. I want you all to focus on things that actually move the market, and things like MACD, RSI, moving averages. They are good tools to use because they help paint the picture. They lag though, so they're only going to develop data after price has traded at it. What I want you all to focus on is price and volume because that's real time, there's no lag, and it's what physically moves the market. Anything that does lag is going to skew your risk to reward, and any lagging indicator like this, I can only speak for myself, just confuses me more than actually benefiting me and helping me out. So I remove all the noise. I focus on very clean charts. The first thing that we are going to talk about is supply demand zones. This is not an indicator that you could put on your charts and it automatically gets done. There are ones out there, they are not very reliable, and the human eye is better than computers in my opinion because the human eye can take in context and can take other things in that computers cannot replicate. So yes, there are supply and demand indicators. They are not useful in my opinion. They do not work out very well, and I would not recommend wasting your money on one because the best way to do it is draw them yourself. So every level that we see on my charts is drawn by myself. They are all based on order imbalances off of the chart. This is a supply zone that formed last Friday as I'm recording this video when the market came to the downside and formed supply. So our idea here as traders is to wait for the market to come back into the zone. And if we're talking about supply in this case, we can look to take the market short with extra confirmations or with extra indicators that we're going to go over in this video for a quick example. So these, I just look at zones as my areas of interest. Just because we're coming into a supply zone or just because we're coming into a demand zone does not mean we automatically have to take a trade. We want to trade on the same side as buyers if we're playing calls off demand, and we also want to trade on the same side of sellers off of supply. These zones, sometimes we break above supply, sometimes we break below demand. They aren't anything that's magic in the market. These are just my areas of interest, and I use price and volume to confirm it and really give me my when and why I'm entering the trade. So this demand zone was developed back on last Tuesday/Wednesday in the overnight session. This is on the S&P 500. Fast forward it, last Friday, we hit the demand zone, gapped up overnight, rallied inside of supply, and then as the market was opening up, we came into this demand zone and had a nice rally on the ES future. Whether you trade any S&P 500 related instrument, SPY options, SPX index, even the futures itself, it's all relevant and all relatable. It also works extremely well with other equities. This was Tesla in the last 2 days, sold off into demand. And if we could get market confirmation, and if the market does rally out of demand with it, as the S&P or as NASDAQ is rallying, to pull up NASDAQ here as well, as both of these names are rallying, and I see a name, a major market leading equity like Tesla, coming into demand as well and bouncing with it, then it presents a high quality trading setup. It's all about market confirmation with an equity confirmation. Same thing on Apple. This thing rallied earlier yesterday, pulled back into demand, then opened up inside of this demand zone today and had a clean downtrend break, just like this. Nice clean downtrend, if you want to maybe even call it a wedge, with lower highs and higher lows. Broke out of demand and rallied while, let me pull this up here, while the S&P 500 today had an extremely strong rally and the same downtrend break that we saw earlier. So it works extremely well. These are just areas of interest. These are areas that say, okay, listen, price is coming into a zone. Let me watch what happens here. Let me see if I can find confirmation with my other tools. Let me see what the market does. And I want to trade on the same side as buyers and sellers. If we break below demand, I remove it. And if we break above supply, I remove it. But why I like supply and demand, I use this as my core. So think of this as a core. Think of this as a tree trunk. And other tools, other styles, other systems are the branches coming out of the tree trunk. Supply and demand for me is the core because there are so many things you could do with it. This gives me structure. This gives me my where in the market, and I'm not trading blindly. It also offers extremely low risk and a high probability with a high reward trading setups if timed properly and in trading in the proper manner. Now, the next indicator I have on is a custom study on ThinkorSwim. This is the buying versus selling volume. I've made videos in the past. Why I like this indicator so much is because it has a label of today's volume compared to the daily average volume. And volume is everything in the market. If price moves because of volume coming into the market will dictate what price does. Orders coming into the market dictates what price does. So reading volume is a very crucial skill. The colors are important to me, but not as important as just seeing the volume bars print itself in real time and seeing how volume is doing in comparison. So for example, we had some green volume pressure coming up. And by the way, this is calculated by the difference in upticks and downticks on TOS. If you want this indicator, just message me on Instagram. I have no problem sending it to you. And if you're a member in the Discord, just go to the ThinkorSwim tab and it's in there. So we had a strong rally into the supply zone, some green buying pressure into the zone, then volume starts to die out. As we die out and the market starts to move lower, losing steam, we start to see some more red down ticks coming into the market, yet price really wasn't coming down with such strong velocity. Then we get the rug pull and we get our bounce right off of our support level at 4180. Then we come back up, rally again later in the day. But the key point here was today we did 2 million lots on the S&P compared to a daily average of 1.8 million. When we start to see higher volume develop intraday, it's going to give us a good sign is it going to be a balanced day? Is it going to be a directional day? Is it going to be trending? What type of setups are going to be presented? And if we could read volume properly, it's going to tell us a large piece of the story that may help us avoid setups, or it also is going to help us take very good high quality setups. So we rejected that supply perfectly, then came into the higher supply above. And look, volume came in. I think there was a temporary news article that came out. Volume came in, price precedes news, the market dumped out of supply, heavy volume coming in, and then a quick bounce back up. So volume is relevant in areas where it's significant. If, we're trading in the middle of this range right here, going back and forth, volume is really not significant at all. Why? It's not in an area of interest. We're in the middle of a range, and there really isn't significant volume that's going to move the market where the market's moving in a high manner. Yesterday on the S&P, when this thing bounced off demand, we started to see some selling pressure inside of it. As soon as we bounce out of it, same thing. Volume starts to die down and the buying pressure comes up, meaning more upticks in the market. Then we hit supply, heavy buying volume inside of supply with no follow through and no continuation might be a good sign of a reversal. So if we are in long, maybe look to take profits at supply, or if we aren't in long and we want to maybe take the market short with some selling confirmation, maybe we can figure out that a lot of buyers are trapped down here, or there's a large passive seller absorbing all the buy orders that might pull the rug when we come down. And that's what happened perfectly, made lower lows and lower highs off of that supply and formed new supply that actually rejected today earlier in the morning. Also, same thing on other equities. You know, I like to see heavy volume in the market. Apple at one point, I think it was around maybe noon or 1 o'clock Eastern, we did 50 million or 60 million shares traded. I think it was that number. Don't quote me exactly. And we still had 3 or 4 hours left in the market open. That's a good sign that we're going to see maybe some continuation, that dips are going to get bought. If we're trending down, then maybe rallies are going to get sold into because there's heavy volume. And heavy volume means there's a lot of interest in the market. You want to trade when volume is heavy. You want to trade when there's activity because volume brings activity and it's harder to manipulate the market when there is volume and when there is volatility. When the market's dead, let's see if I could find an example impromptu here. When volume is dead, there isn't gonna be a lot of setups. So I mean, on a day like this right here, yeah, we had a consistent uptrend. Dips got bought up, but price really didn't go anywhere. You know, we moved in a $3 move, $4 move, and there really wasn't any crazy price swings. Volatility was dead. Whereas on a day like this, you know, there was some nicer volume, cleaner movement because volume brings interest and interest is what moves the market. It comes down to buyers and sellers, effort versus reward. That's what truly moves price, and volume will tell us a good story of that. The next indicator is very simple. It's this purple line on my charts, and it is a normal VWAP line. It may look a little different than yours because I removed the plot for my upper band and my lower band. I only really care about middle VWAP. It's just what works the best for me, as that's really all I could explain. But if we are above VWAP, I like it to act as support if we pull back into it. And if we are below VWAP, I like to see it act as resistance if we come up and trade at it. It doesn't happen every single day. You know, some days we trade in the middle of it and it doesn't act as support resistance. But when it's obvious and you use it in confluence with other indicators and other styles, it's extremely powerful. How this is calculated is it gets the dollar average of the instrument that you're trading and it divides it by the volume of that period. So a lot of big money on Wall Street, they do use VWAP, and it's a very important reference area tool. You could consider it an average price. I guess I don't want to call it the mean, but it basically is an average, and price does tend to gravitate near it or inside if we are balanced out. And if we are trending, we are going to move far away from VWAP. I also like it pointing up if we are going to start uptrending and start pointing down if we are going to start downtrending. You know, this is an example on NASDAQ, and here's an example on Amazon today and today. Came down into VWAP, acted as support pretty perfectly. You could say maybe we broke out of this downtrend line, however you want to draw it, and had a nice end of day rally. Maybe you could get some confluence, act like there's a demand zone that was right here, and hey, we just bounced off demand. It's also bouncing off VWAP. It's breaking out of a downtrend line. Let's take the market long, right? The more pieces to the puzzle that you could add, the higher quality of a setup that you're going to take, the more confluence you have, and it's just going to bring a high quality setup. Here we got one on Apple. The other day, we're below VWAP. VWAP is pointing down, and what do? We come into VWAP. It acts as resistance. We're never going to hit it exactly to the penny. You know, we might have a wick above it. As long as this thing doesn't start pointing upwards and we start reclaiming it, maybe creating demand above VWAP, then we got to remain that this thing can reject and start selling off. Now, that's not to say that if we have a demand zone, let's just say right here, and we're still below VWAP, that doesn't tell me not to take the market long, because this thing could bounce and this thing could, you know, blow past VWAP and have a strong rally to the upside. So just because we're below VWAP doesn't mean that I might not play a reversal. This just gives me context if it does act as support resistance. So Apple, it acted as resistance. We broke through this downtrend line with heavier selling volume. Maybe this could have been a confirmation signal to get short, right? Maybe we could have taken the market short. We got some strong buying or selling volume coming in, break of a downtrend line. It's acting as resistance, and this was on March 11th. And if you look what happened on the S&P 500 on March 11th, this thing also acted as resistance, and this move up, rejected resistance, was forming supply. Act like this is a pink box. We hit VWAP. This is supply potentially forming from this move up, this consolidation, and if we got to move to the downside, would have validated new supply that formed, hit VWAP with it, and as we acted as VWAP on the S&P and started selling off, look what happened with Apple. It's the same exact time, started selling off, and then a nice $2-3 move from VWAP acting as resistance. I saved the best for last. Reading the tape, any type of order flow analysis is the most leading indicator you could get out there. Level 2 shows the order book. It shows what buyers and sellers are looking to bid or offer on, just like any other auction. And time and sales shows those completed transactions on the book. This is what physically moves price. There's nothing else. If we're coming to, let's just say, VWAP and we see a huge buy order, then yeah, VWAP caused the buyers to buy it. But what physically moves the market is those buy orders coming into the market. It wasn't VWAP that caused the market to move up. It's those buy or sell orders. So in my opinion, reading the tape is extremely key. I just added a full section on tape reading to the A to Z course. If you guys want it, I have other order flow tools that I do use in other platforms that we could go over. If you want it, it's highly requested. I don't mind adding a section to the course as well. I do use Bookmap. This is visually a level 2 and time and sales shown in a different manner. So today, as the S&P 500 was rallying inside of this 4207 supply zone, on Bookmap, there was some selling pressure coming in near the highs at 934. And as the market was coming up, there were passive sellers adding liquidity to the market, and it kind of scared the market to move any higher. Then sellers took control. We made lower lows, we made lower highs, and this provided a pretty nice setup. If we got short, let's call it conservatively, at 4203, 4201, and our stops high a day, we're risking about 6 points. This offered a 30-point sell-off or a 25-point sell-off off a 6-point risk to the downside when we bounced off of my 4180 support level. So reading the tape is a crucial skill in my opinion. Order flow, if you trade futures, you have to read the orders coming into the market. The market moves because of orders actually coming into the market, like I just said. And it's extremely, extremely important. If you guys want it, comment down below. I could add some videos to the course if you guys want. And the last one is market context. This is something that I do have videos on, but it's something you learn a lot through screen time and experience. It's not really definable. It's more just, hey, this happened. Let me recognize it and let me build my brain, the muscles in my brain, to spot these patterns subconsciously if I see them at another point in the future. So context is very key. Remember what I said earlier that, hey, we look to take the market short at supply and long at demand. Well, the market's not going to move from supply to demand. We're going to have zones that don't work out. We're going to have, buyers trying to rip the market up. We're going to have sellers that try to move the market to the downside. So that's where context comes into the picture. Things change. You could plan all you want, but as the market's developing, new scenarios play out. And I think context is something that is very key because the market is unstructured. And if you try to structure it, you're just going to get run over by the market. But context will kind of help you out with this and will help you trade on the same side as the market. So to explain this a little better, I post my pre-market plans every single day in the Discord of what I'm watching, areas that I'm looking out for, and just potential setups. Here was our pre-market plan on the S&P 500 today as I'm recording this video. We had demand below at 4136 that we bounced off overnight. Said for me to lean towards the bull side, I would like price to hold or break above 4180, which is this yellow line. We broke above it pre-market. For a quick move into the 4207, 4216 supply, I said the supply is key. And then we got that 4234 supply above. If we find the effort from buyers today and we can create demand inside of supply, the chances of a trending continuation move is very possible. First targeting the 4263 area. So as the market opened up, it depends on how you trade. Everybody's got a different style. Everybody could trade differently. Just you have to trade based off of your edge. We broke above that 4180 area overnight. We rallied into that supply zone as the market opened up. We pulled back into the 4180 and found a bid. Then we broke a downtrend line. We did put in a lower high. You could have got short off this, but if you didn't take profits, you probably would have got out for break even if it came up or for a small loss. And then we rallied into the supply zone. Now, what's key here was I said that if we create demand inside of supply, what that's telling me is that an area where we already had supply, if we find new buyers coming into the market, then the chances of more upside is extremely, extremely possible. So in the intraday commentary tab, this is basically where I put, what I'm watching as the market's developing. I said for us to slice through that 4207 supply shows strength from buyers. This was at 11:30 when the market looked like this. If we could do the same at this 4234 supply, then I will not be surprised if we trade at 4263 supply by end of day. This is context. This is telling me sellers are not in control. You could play the market short, but the chances of it working out is going to be a little slimmer. That's not to say that it is going to work out or it's not going to work out, but sold off. You could scalp it off that. You could scalp this high. Every time we hit it, we failed. But we were still above this 4207 supply, which was responsible for, yesterday's sell-off to the downside. And if we're consolidating in this, especially on lower volume, still above VWAP, volume kind of died out, we are creating demand. Consolidation and balance is extremely good because when we come up and volume starts coming in and buyers start showing effort, we're going to get that rally. And we hit 4263 perfectly by end of day. Context kind of gives me my levels. Supply demand gives me my levels, where and why, or where, and I let my execution, which is the most difficult part that you're going to have to learn in trading. That tells you when, or that tells you where, that tells you when and why to enter, and supply demand tells you when to enter. So these are all the indicators I use. You'll see all my charts. I consider them naked. They're very clean. Remove all the other noise. Make your trading as simple as possible. And make your thought process as clean as possible, and you will trade so much better. If you have any questions, feel free to reach out, comment, like this video if you got any value out of it. And if you want the buying and selling indicator, just message me on Instagram. I got no problem sending it out. And if you truly want to learn more, check out the links in the description below. I offer a very in-depth and educational course that comes with access to the Discord at no extra charge. And I do plan on raising the prices at some point in the near future. So I'm going to leave you all off on that note. Peace out.